Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if a company is secretly making a huge move or just telling us a story. Today we are diving into a fascinating filing from Cintas Corporation, or CTAs, as you might see them on the stock market. This report is all about an offer to buy another company, and let me tell you, it has some serious implications. We will break down what CTAs is proposing, what it means for their business, and what you as an investor or just a curious observer should be looking out for, because sometimes the biggest moves happen not with a bang, but with a quiet, confident proposal. Before we get into the juicy details, if you like getting straight to the point insights from these corporate documents, make sure you are subscribed. And hey, if you want to chat about these findings and more, join our Discord community. The link is in the description below. So what is the big news? On the 22nd of December 2025, Cintas Corporation announced they made a proposal to buy UniFirst Corporation. That is a pretty big deal in the business world. Cintas is a well-known company that provides a lot of services for other businesses like uniforms and workplace safety products. UniFirst is also in a similar business. Cintas is offering to buy all the shares of UniFirst for a cool $275 per share in cash. This is not a small acquisition either. A deal like this could really change the landscape for both companies and for the industry. Let's look at Cintas itself, the company making this offer. They are incorporated in Washington with a commission file number of 0-11399 and an IRS employer identification number of 31-1,188,630. Their main office is located in Cincinnati, Ohio. Their stock ticker is CTAs and it trades on the NASDAQ Global Select Market. This tells us they are a significant player in the stock market. Now, Cintas is saying they are not an emerging growth company, which is important because it means they have to follow all the standard financial reporting rules without any of the extended transition periods that newer companies might get. The filing also lists their registered securities. Their common stock with no par value trades under the symbol CTAs on the NASDAQ Stock Market LLC. This confirms their public trading status. Alright, let's get to the heart of the matter. Cintas Corporation issued this press release on the 22nd of December 2025 to confirm their proposal to acquire UniFirst. They are offering $275 per share in cash for all of UniFirst's outstanding common and Class B shares. This is a strategic move, and Cintas is attaching the press release as Exhibit 99.1 and presentation slides as Exhibit 99.2. These documents are incorporated by reference, meaning they are officially part of this filing, and we should pay close attention to them for more details. Now, every good business report comes with a section called forward-looking statements. This is basically the company telling you, hey, these statements about the future are not guarantees. Cintas is being upfront here. They are saying that any statements about their future, their business, or this potential deal with UniFirst carry risks. They caution investors that actual results could be very different from what they are saying today. Some of the specific risks they mention are pretty important. For example, they say there is a risk that the transaction with UniFirst might not even happen, and if it does, it might not boost their earnings per share as much as they hope, or it could even lower their earnings per share, which would be bad for their stock price. They also talk about the possibility of incurring significant costs for this deal that could be more than they expect, and there is the risk they might not achieve the expected benefits or synergies from combining the companies. They are also worried about how announcing or completing this deal could affect the market price of their own stock. Lastly, they mention unforeseen liabilities and future capital expenditures related to the deal. These are not small things to consider. They essentially lay out a lot of reasons why this deal might not go as smoothly as they are hoping. For more detailed information on the risks, Cintas faces they point us to their annual report on Form 10-K for the fiscal year ending May 31, 2025. This is standard practice and indicates they are directing us to their more comprehensive risk disclosures. This section is crucial. Cintas is making it clear that this report is about a proposal. They also state that they might file other documents with the US Securities and Exchange Commission, or SEC, like registration statements, proxy statements, or tender offer statements. They are saying this current report is not a substitute for those future filings. They are urging investors and security holders to read those future documents carefully when they become available, because they will contain even more important information about the proposed transaction. They also mention that investors can get free copies of these documents from the SEC website. It is very important that investors do their homework and look at all the official filings. This part is a legal disclaimer. Cintas is stating that this report is not an offer to sell or a request to buy any securities. They are also saying that no sale of securities will happen in any place where it would be against the law. They also mentioned that they and their directors and executives could be considered participants in how they might try to get shareholders to vote for this deal. This is a common disclosure in these types of situations. They then reference their 2025 proxy statement for information about their directors and executive officers, their stock ownership, and any related party transactions. They even list out specific sections within that proxy statement and their 2025 10, where you can find this information about who is involved and what they own. They also highlight that any changes in stock holdings by these individuals will be filed on separate forms called Form 4. They even provide links to some of those specific filings by different executives like Robert Coletti, Joseph Scamanis, Karen Carnahan, Melanie Barstad, Martin Mucci, Beverly Carmichael, and Ronald Tyso. This level of detail is to ensure transparency and compliance with regulations about insider trading and corporate governance. Cintas also adds a note about the information they are using regarding UniFirst. They state they have taken this information from publicly available sources. While they don't have any reason to believe this information is inaccurate, they also clearly state they are not responsible for its accuracy or completeness. This is a way for them to cover themselves legally regarding the information about the company they are trying to acquire. Finally, we get to the exhibits. Exhibit 99.1 is the actual news release from the 22nd of December 2025 titled, Cintas proposes to acquire UniFirst for $275 per share in cash. Exhibit 99.2 is the presentation slides dated the 22nd of December 2025. These are the main documents that flesh out the details of their proposal. We also see Exhibit 101, which is an interactive data file for the cover page, and Exhibit 104, which is the cover page itself formatted for inline XBRL. And then we have the signatures. This report is signed by Scott A. Garula, who is the Executive Vice President and Chief Financial Officer of Cintas Corporation. He signed it on the 22nd of December 2025, affirming the content of the report on behalf of the company. So what does this all mean? Cintas is clearly making a bold move to acquire UniFirst. The offer of $275 per S-share in cash suggests they see significant value in UniFirst and believe this acquisition will be beneficial for Cintas shareholders. They have laid out the potential risks, which is a good sign of transparency, but the sheer fact that they are making this offer indicates confidence in their strategic vision. Now, for our analysis, Cintas is essentially signaling a major growth initiative through acquisition. This isn't just about buying another company, it is about consolidating market share, potentially achieving cost savings through merged operations and expanding their service offerings. The cash only offer simplifies the transaction for UniFirst shareholders, but also indicates Cintas has substantial financial resources or financing in place. The risks highlighted by Cintas are very real. Antitrust concerns could arise with two major players in the same industry merging. Integration challenges are always present when combining two companies, and the synergy targets often prove overly optimistic. The market price of Cintas stock could indeed be volatile depending on how this unfolds and whether other bidders emerge. Looking at the broader picture, Cintas has a history of strong operational execution. Their forward guidance, though, subject to risk, suggests they believe they can successfully integrate UniFirst and extract value. The key question for investors will be whether the $275 per share price represents a fair valuation for UniFirst, and if the combined entity will be worth more than the sum of its parts. Given the information here, Cintas seems to be playing a strategic long game. They are not afraid to make significant moves to solidify their position. In conclusion, Cintas Corporation's proposal to acquire UniFirst is a significant event that warrants close attention. It represents a potentially transformative step for Cintas and could reshape the competitive landscape of their industry. We will be watching closely to see if this proposal progresses and what further disclosures Cintas makes. Alright, that is our deep dive into Cintas Corporation's filing. What do you think about this potential acquisition? Is it a smart move or a risky gamble? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate breakdowns, and remember to join our Discord community linked in the description. Thanks for watching, and we will see you in the next video.